Thanks for having me on, Wilfred.
So let's talk about exiting the Zillow Homes business and the home flipping as we just described it as. Is this a sort of full-scale admission that you should never have gone into that business line in the first place?
It was a really tough but necessary decision, Wilfred. And I guess first and foremost, the decision to wind down our Zillow Offers iBuying operation involves a layoff of about 25% of the workforce. And that is a heavy, heavy thing given all of the people involved and all of the work they've put in. And we're committed to a smooth transition there. So I just wanted to say that up front. But this was a necessary decision. We just determined that being an iBuyer was too risky, too volatile, and ultimately addressed too few customers, too narrow.
So I mean, I guess some could have suggested to you before you did it that it's going to be volatile and unpredictable and obviously change the sort of predictability of your earnings flow. So to what extent was this a sort of I told you so moment to some people that said that in the first place?
I'm sure there are those that told me that, and I'm sure there are those out there wagging their fingers at me right now, and justified. We went into the business as a big swing on the bet that we could actually predict the price of a home 6 months into the future and do so with a very narrow margin of error and have our hold times be very short. And what's happened is COVID happened. We've had a global pandemic. We've had a housing market that froze up initially. And now we've seen a growth rate, an acceleration rate in the housing market that we've never before witnessed in history. And as you might imagine, that has made predicting the price of a home 6 months into the future really difficult. And we're doing it at a scale that is 1/10 what it needs to be in order to get to the scale we think we need to achieve to offer good prices. So we stepped back, we assessed, we looked at the volatility in our earnings that we're reporting today, and we said, hey, we don't need to be doing this. We sit in a privileged spot in a mover's decision-making process. We get a good look at all of these movers, and we now have a whole bunch of tools that we can get them to move in a more asset-light way.
So as a result, Bloomberg's reporting today that you have 7,000 homes to sell for $2.8 billion and that you're pitching it to all sorts of institutional investors. Can you confirm that? And separately, a KeyBank analyst said most of those homes are underwater.
Well, we have always sold the homes that we've had in inventory in all ways, including the regular market and including to these kinds of buyers. We've always done that. And we are not, I will tell you, we're not in any kind of a fire sale move. We're not in a big hurry to sell these homes. We're going to do it in an orderly fashion. These are appreciating homes. They are real assets, and we will wind down our inventory in an orderly way. We are in a big hurry. What we are in a big hurry to do is get them ready to be sold, to get them closed, to get them renovated, and to get them back on the market.